Welcome to Dragonfly Trading. My name is Carrie, and I'm a full-time trader in the crypto and Forex markets. Today's video is going to be an update on Bitcoin, and we're going to take a look at the SPX. Remember, this is not financial advice. This is just the way that I see the market. I have gotten a lot of emails asking me to extend the pre-sale out for the course. I am going to extend it out 24 hours for those of you that have asked me to. Those of you that have already purchased it, do not worry. When the timer runs out, you will get access. Let's get started. All right, we're on the weekly time frame. We know that the 200 MA is coming in right at 23,000. The 300 is sitting at approximately 16,400. We also know that we have never lost the 200 by a candle close. We came very close here, but we were able to recover. We have wicked through down to the 300, but we've never broken it. This is something that we really need to watch. These MAs are going to be our strongest support. What is also coming in at that area is the base channel in blue. You can see that it is right on the 200 MA. In a prior video, I talked about if we were to overlap this 20K area, what does it have to be? Because there's only two things in Elliott Wave that overlap that way. Higher and lower degree 3s and 4s, and what I call a nest of 1s and 2s. The 1s and 2s need to be getting smaller and smaller and smaller as they go up. In Bitcoin's bull runs, even though it doesn't look like it on long scale, they are getting smaller and smaller, which means it's very possible that it could be a nest of 1s and 2s. If we lose the 20K top and we come into our 1, we will have to assume at that point that it is not a 4 and that it's a 2. Yes, if it's a 2, we will be in for a long bull market. It's not what we want, but the good news is that the third wave that will come, that will be like nothing we've ever seen. It will take out this top like butter. It will be amazing. But yes, we will have to sit through a bear market. If we can't hold the 200 and we come into our 1. Okay. If you've been watching my channel, you also know that I'm very partial to this WXY count. Why am I very partial to it? Because these fib levels are lining up right with that weekly 200, and it's also lining up right with the channels. As you can see, the blue base channel is coming in right on these fibs also. Now, we don't have a lot of support there other than the 200 MA, but it could happen. Let's talk about it quickly. If we want the brown WXY to happen, it's assuming the correction's coming from over here, and we want it to hold 23,000 at this 1.382. Now, on the internet in books, you will not find many reference to what a complex structure should hold based on Fibonacci extensions. There is not a lot of information on it. But in my experience and a lot of other experienced long-term 30-year plus, okay, we have come to the conclusion that a WXY shouldn't take out the 1.382. So that is what I'm going with. Let's talk about how it could hold and not be this brown WXY. If it decides to climb higher here, we would assume that it's this yellow X wave. The Y wave could truncate and hold these fib levels. That is one way. Another way is if the market decides to roll over for a fifth wave for this white C wave and then makes the X wave, this X wave would need to come very high, because if it doesn't, then this Y wave cannot truncate and hold these extensions. If we lose it, we will flip to the yellow WXY. This one will come off the table in brown. We can hold 19,300 or 17,300, where this yellow Y can hit. At that point, we have to come out of here in 5 waves. If we don't, then it gets uglier. Okay, so those are the ways that we can either hold the extension, all the ones lining up, or hold the lower one. If we lose the lower one, we will have to flip to this count, where we made a 1 or an A 2 or a B, and we're either coming down for 3 or a C wave. The C wave, yes, can come down to the 2.236 at 10,000. But we won't know which one it is until we see how we recover. If we recover in 5 waves, then wonderful. We're on our way out of here. But if we recover in a 3-wave move, then it's going to get ugly, because what starts with 5 ends with 5. So let's hope that it's not the 5-wave move. We have one other option, which is a diagonal. Now I know in the Frost and Precher book, and I may not have pronounced that right. I'm sure you're laughing if you know that I didn't. I know that it says that ending diagonals should be all zigzags. But I can tell you that I have seen diagonals that are not all zigzags. So you can decide to stick to exactly what the book says, or decide to bend. Okay? After seeing so many diagonals that are not all zigzags, I have decided to let it be a gray area, okay, where this can be a WXY. So if this correction was to extend higher and then come down in 3 and make a diagonal, and then we come out of here in 5 waves, what else can it be? We have to accept that that is not a diagonal. I'm sorry. We have to accept that that is not a zigzag. Okay? Will this happen? I don't know. We'll have to wait and see. But don't forget, yes, we would like to see it be an ending, but it also can be a leading. Okay? Let's take a look at the lower time frame. I am still thinking that there's a high probability that we make a connector here and that we give this leg a partner that fills the gap. This is where we would not roll over for the C wave now. We would pivot up for the yellow X. If it's going to do this and make this 3-wave move in the middle, I would think that it would hold the 618 or the 1-to-1, because underneath that, as you can see, the support tapers off tremendously. Yes, this can come deeper, this 3-wave move, but if it does, we would most likely get stuck and backtest this as resistance. So if it's going to do it, I would like to see it hold the green box, the green support and the red box, so that it can pivot up and give this leg a partner. If not, then it's coming down in 5 waves. Coming over 30,700 would be a strong possibility that the 5-wave move is not happening. Let's talk about why. This move right here looks very strongly as a 3-wave move, meaning that this whole wave to the downside is a 3-wave flat for W. This move to the upside's 3 waves for X, and then we can be making a zigzag for Y that could truncate at the 618 or the 1-to-1. If we take out this area where I have 2, yes, it could be that this was 1, 2, 3, 4, 5, and this is coming up higher for a 2. Okay. But if it breaks 30,700, as you can see, there is big insufficiency here. So it's definitely going to run up into this resistance. Taking out this high is complete invalidation for a 5-wave move to the downside. So taking out the red resistance here in this order block, it would be less likely that it's coming down in a 5-wave move. Okay, so it's pretty obvious if you're going to short where your stop would go, and it's pretty obvious if you're going to long where your stop should go. Not financial advice, of course. Okay, but this looks very corrective right now, but it can easily turn into a 5-wave move. Which one it's going to do, we're going to have to wait and see if it can hold the 618 or the 1-to-1. All right, let's take a look at the SPX. All right, let's talk about the yellow count first. The yellow count is assuming that this wave was a 3-wave move, that this wave to the upside was a flat, hitting the 618, and this is a 5-wave move to the downside for an ABC. Now remember, there is always a bull and a bear scenario. If it's going to be the bear scenario where it makes 5 waves, then this was a 1. This whole move in the middle was a 2. It plans to come deeper to the 1.618 at 3,600 for 3. It will bounce for 4 and down it will go for 5. We don't want this count because what starts with 5 ends with 5, which means we would come deeper after a little rally. So what does it need to do to not make this happen? Now, yes, the C wave can come deeper. So if this fails, the C wave can come deeper. But probabilities are that if we take out the 1.618, it's probably going to be 5 waves. All right, let's talk about the lower degree. If we want this wave to have the potential to turn the trend, meaning go back to the bull run, we need 5 waves. Right now, we don't have a 5th wave. Okay, so what it needs to do, it needs to hold its prior 4th, needs to hold this correction as a 4th wave, and push up for a 5th. At that point, we are going to get another 5 waves if it can do this, meaning that it'll pull back and another 5 waves will come. It will all depend on if it can make an impulse wave from there. Okay, it will need a 3 up to the 1.618, a 4, and a 5. It has to do that. If it doesn't, it could pull back, make 5 waves, and all this is a 3-wave move. Okay, where we would have 3, 3, and then it would come down in 5 or 3 and come deeper. At that point, it has to come out in 5 waves. If it doesn't, well, if it makes 3, then we're connecting all of this to the 3 to the downside. Okay, so let's hope that it can make first on the list is this 5 waves. It needs a 5th wave. If it doesn't, then it is definitely rolling over. Okay, and it's either going to come deeper for the C wave or a 3rd wave. I hope you enjoyed this video. Don't forget about the course pre-sale, and I will see you in the next one.